morning and welcome to another edition of Business Morning. I'm Chimeze Obi Iwagu. The social unrest in the country did not end with the End SARS protest. There has been looting spree across the country as rampaging youths break into COVID-19 palliative warehouses without restraint. And this they are doing without minding the presence of security agents. Some of them are even making brisk business selling some of the looted items. Let's watch this again.
This stampede is not caused by an incident the people are running away from. Far from it. It is a free-for-all, and hundreds have come from far and near to this warehouse in Osun State, southwest Nigeria, to help themselves. The foodstuff being carted away was stored by CACOVID, a private sector initiative supporting the fight to mitigate the effects of the coronavirus. But to these people, at a time when they are feeling the crunch of the lockdown, first from COVID-19, then the End SARS protests, Christmas has come early, bearing gifts. Still in the southwest, some looters in Ekiti State invaded the federal government silos and the Agric Development Program warehouse in Ado-Ekiti, the state capital, looting bagged items and other materials. In their large numbers, the people besieged locations, apparently to cart away food items, especially CACOVID palliatives, has been witnessed in some other states across the country. In Edo State, crowds besieged Medical Stores Road in Benin City, where looters broke into a warehouse storing COVID-19 palliatives. A young man who gained access into the warehouse through the back entrance is said to have fallen and died while attempting to escape with some items. Apparent surprise and delight also hit residents in Calabar, the Cross River State capital, and no one wants to miss out on the opportunity. Same excitement is experienced in Kwara State North Central, where another CACOVID warehouse stored in a cargo terminal at the state airport has seen hundreds flooding in and out with their loot.
Lives are being threatened, businesses are being looted. Public properties are also being targeted. This is unacceptable, and it is not who we are. To curb this act of criminality, I hereby declare 24-hour curfew in the Ilorin metropolis.
Meanwhile, the warehouse storing emergency COVID-19 palliatives suffered the same fate in Bukuru, just south local government area of Plateau State. The storage houses various items ranging from grains, pasta, and agricultural equipment. The expectation of people is that the food materials donated by the CACOVID drive would have been distributed, but this discovery leaves many wondering why all this foodstuff was not directed to those in need of it. And perhaps more interestingly, who are those responsible to explain this?
In the meantime, members of the private sector-led coalition against COVID-19, CACOVID, has called for calm amidst the looting of the COVID-19 palliatives meant for distribution in various state government warehouses across the country. The coalition has urged those involved in these raids to desist from the act in order to allow the states to proceed with peaceful and fair distribution of these palliatives to the neediest and most vulnerable in the society. Over the past few months, the private sector, through CACOVID, has been working with state governors, the FCT ministers, and the Governors Forum to procure, deliver, and distribute these food relief items to almost 2 million most vulnerable families across the 774 local government areas of the country as part of the private sector's support to the national response to the COVID-19 pandemic. Well, inequality, hunger, poverty and misery. These are the words to describe the actions of the youths and villagers who went on rampage, looting items meant for distribution as palliatives. Oxfam International, a global movement of people working together to end the injustice of poverty, on its website says, Nigeria is not a poor country, yet millions are living in hunger. So how can this happen? What makes Nigeria so unequal, and how big is this inequality gap? Let's look at some of the numbers according to Oxfam. Oxfam says the combined wealth of Nigeria's 5 richest men, put at $29.9 billion, could end extreme poverty at a national level. Yet, 5 million face hunger. More than 112 million people are living in poverty in Nigeria, yet the country's richest man would have to spend $1 million a day for 42 years to exhaust his fortune. The international body says again, the amount of money that the richest Nigerian man can earn annually from his wealth is sufficient to lift 2 million people out of poverty for 1 year. According to Oxfam, poverty and inequality in Nigeria are not due to a lack of resources, but due to the ill use, misallocation, and misappropriation of such resources. For the international organization, at the root is a culture of corruption combined with a political elite out of touch with the daily struggles of average Nigerians. Another consequence of the mismanagement of the nation's resources, according to Oxfam, is the high rate of unemployment, especially among the youth. Youth unemployment rate is currently at 34.9%. So, how then can Nigeria close this gap and ensure adequate economic development? I'm being joined by a development strategist, Dr. Emeka Okengo. Dr. Okengo, good morning. Thank you very much for joining us on the program.
Thank you for inviting me. I'm glad to be here. Good morning.
Now, watching that video of the youth cutting away those food items and all the valuables, for me, I see poverty, I see hunger, I see misery. For you, what came to your mind?
Well, I see social disconnect. Okay, I see loss of social morals and values. And I see that we are not aggregating or disaggregating the issues in proper context. I think we are lumping up the issues. And it's important, if we're going to make some sense out of this conversation, let's be able to do a little bit of a disaggregation. It's important for you to know that, in the same country you're talking about inequality, millions of youths came out, conducted themselves in a very decent and organized manner, put out their thoughts, put out their demands in a very, very clean and decent manner, up until the time there was this reaction and shooting. And that's one set of the Nigerian youth. And please permit me to empathize with everybody who's lost life on both sides of the divides, and then salute the courage of those youths who conducted themselves in such a civilized and civil manner in now pressing forward their demands. They were not imported, they are Nigerians. That's the first set. Then you now have shown another clip of people who are obviously, thieves. And most of the clips you showed, I didn't see, maybe in one or two of the warehouses that had the COVID, and there have been explanations to it. Most of these other things, they were not looting food. They were stealing items. They were stealing household items. I even saw a clip of somebody using a keke to tow, tractors and all that. Now, that's the second, aspect of this. And you're just talking about people who are thieves. And it's important to call it what it is. And that's not who we are. That's not who we should be. Okay? And then in your third clip, you're talking about the richest Nigerian, being able to use his wealth to lift $500,000, whatever figures that Oxfam was giving there. I mean, that's not proper, and that's also not right. Okay? What I think we should be looking at now is those amount of people that we saw in the streets, where are they captured? What database do you have on them? This is the failure, of our data system. This is a failure of what you call national planning. More so when, if you remember or recollect, we are calculating our GDP against every citizen in the country. So I think for me, it's important, Chimezie, in going forward to be able to now put a meaning to this. If the rich man is able to live there, what do you mean by hunger? What do you mean by poverty? Can we be able to put a proper meaning to it? Okay, are you trying to say that this rich man should now start sharing money to families so they can leave them out of poverty? Would he really leave them out of poverty? Okay, are you rather saying, okay, let this rich man now invest his money into things that can be able to engage people, and then everybody begins to get productive? Is that the argument of some is trying to present? Now, we must be able to take these things and put them into proper context. And for me, yes, I know there is social inequality. There is no way there can be. And it's global. It's not as if I'm not trying to defend, people being hungry or being vulnerable, and a government not catering or bothering about the welfare of people. But I'm trying to say that in a country and climate such as ours, it's also important that in some other things we do. Now, the people you saw there looting those shops and looting those shades and looting people's properties and going in to cut away people's personal household items, would you classify them as the most vulnerable? Would you classify them as the most poor? Would you classify them as people who are hungry? I mean, that's a question we need to ask. That's a question that begs for answers.
Dr. Kengo, can I ask you this question?
Yes.
How do you classify the vulnerable?
Please do.
How do you identify, how do you classify someone who is hungry? How do you classify the hunger? How do you classify poverty? How do you classify someone who is in misery?
Very, very, very brilliant question, and thank you for asking the question. One, you have the sick and the elderly. Okay? Those are the most vulnerable. Those people who are infirmed. You have the disabled. You have the uneducated and unskilled. Okay? You have those who are not living where they don't have any access to any social infrastructure or social services. Those are the people you classify as extremely, vulnerable, extremely poor. You have those who don't even have an opportunity of making, they don't make up to 1,000, okay, month to month, year to year. You don't see them aggregate, 10,000 at the same time. Those are the most vulnerable. Okay, but what makes you more vulnerable is your inability to be able to be productive. Okay, what that means is that you are infirmed, you're sick, you're old. Those are the most vulnerable, Chimeze. And those are not the people I see attacking those shades.
Well, looking at those people, most of those people there, of course, when we look at the set of those people there, most of them are not educated. The educated ones amongst them don't have jobs. Now, government is, always talking about social investment. You just mentioned that. Now, the government talks about social investment without paying attention to that system that would make their social investment achieve its aim and objective. Education, is a social service and not an enterprise as it's being run here in Nigeria. Now, majority of those Nigerians can't afford private schools, or take their children abroad, or look at the government primary and secondary schools, of which I expect some of these people would have attended, which are the least, the basic education you can give to a child. They are an eyesore, no infrastructure, the states are even worse. What kind of a child do you expect to churn out from such a system? So if you're talking about social investment, without the enabling environment, without creating the system, without giving these people the wherewithal to now live their lives, to be productive. You talked about productivity. How do you ensure productivity without creating the system to give them that opportunity to be productive?
Again, very brilliant question. Please excuse me to get a little bit personal, because you are actually a very good example of what I want to say now. Look at your hair, Chimezie. Okay, it might not be right for you to be able to say how much it cost you to make it. It wasn't made by somebody who has a university degree. The person who made that hair you're wearing, that you probably paid close to 20,000 to make, could be uneducated but skilled. So you see, it's important that when we're talking about education, we don't focus on formal education. We focus on skills. Okay? I probably know you have a car, and the person who's fixing your car is also not a mechanical engineer. He's an auto mechanic. Right? And ditto for so many other sectors, your shoemakers and all that and all that. So it's important that when we keep talking about education, Okay, look at the Hausa caps. Look at the skill that goes into, crafting those things together. They're not made by people who read, what do they call it, clothing or fabrics or embroidery or textile engineering or textile management or whatever. They are by those who are skilled. So when you're talking about education, I think it's important you don't get fixated on formal education. We must be able to look at what you call life skills, which is actually what more important than even the formal education in the new normal. So those people you saw there could probably not have formal education, but you also be shocked that one or two of them, they actually now gave one or two. I mean, they were making videos and sending. Some of them were speaking quite knowledgeable English. So we are not talking about people who are totally and completely bereft, of any skills or any capacities or competencies. All right. So for me, I am not trying to say this is a wake-up for government. For me, being a development person, this is always what I've also talked about. Because we do not have a proper compendium of data. We don't have a database. Why don't we have this, what you may be able to call real-time database or dependable or cogent data? It's because the most important component of our country where this data is supposed to be generated is not existing. And these are the local governments. Remembering that, way back in those days, for any education inspector you saw come to stand behind your classroom and you saw your teacher shaking, came from the local government. Ditto for the sanitary inspectors. Okay? Ditto for every other inspection that you were doing at that level over. And it was, people were kept on their toes. Now, the register of birth and deaths, Chimeze, were also kept at that local government levels, but they're not existing anymore. So what it is you now have government is to say, oh, we have done this for 1 million people, and then you have 100 million who haven't gotten. So it looks as if you have not done anything. But if government had gotten the proper data subsets and that, they were able to say, okay, in this locality, this is what it is we've done. We have not reached everybody. These are people who are living here. We've been able to now, reconfigure the system into now, identifying what we now call the new communities. And in this world, the moment you use the word communities, what comes into people's minds will be the local and the rural areas. No, the urban centers can also be converted into communities. If we had this plan, program of action going forward, a lot of this would have been avoided. Because, they say to you who got. Well, a few people got, a lot of people didn't get. And you don't even know who's gotten and who's been given, because you don't have a data that can be able to now, mark off who you have given. So this is, I think, what the major problem is. First and foremost, we are suffering from population explosion. Okay, we're overpopulated. Secondly, we are now chasing this formal education where everybody thinks to be fixated that is a quick fix. Getting a PhD does not guarantee you a job. If you also look at the last statistics, about 22% or 18% of people with PhDs in Nigeria don't have jobs. Go and check the MBS website. Okay,
and then
so
that's the problem. Dr. Kengo,
yes.
Dr. Kengo, don't you think that's also a fundamental problem? How can a graduate, and then you talked about someone with a PhD, not have a job? How?
Yes.
And then you talked about skills development. Yes, I know that there are a number of youths that have the skills. You talked about the person that does my hair. Well, this person is educated, but because there's no job, she had no choice but to learn the skill. But then have you forgotten about the issue of infrastructure? These entrepreneurs struggle to get their own light. Look at our roads. So don't you think there's a fundamental problem there?
It's a chicken and egg thing. Like I said, you've just hit the problem. Okay, and let me tell you why it's a chicken and egg. So which comes first, infrastructure or taxes? Because you need taxes to be able to build infrastructure. Now, government is supposed to be regulator, administrator. It's not supposed to create jobs. It's supposed to create an enabling environment, which is why I'm saying to you that this brings to the fore where I think we are missing, those synergies that we should be building between the private sector and the public sector. Okay, because it is the private sector that is actually supposed to be engaging everybody. And that is easy to do. But for that to happen, there has to be the infrastructure, social and critical. And it's supposed to be the responsibility of government. Now, the challenge becomes, how does government do this if government is not able to raise funds? Do you understand what I'm saying? But it does not mean that, because we don't have funds and government folds its hands. The first thing you need to do is to be able to now generate and aggregate data. And in doing that, you're able to now create new economic streams that necessarily government might just be able to support you either with guarantees or something for you to be able to pull in, the private sector funds that you require to be able to develop this infrastructure. Understanding that a lot of this infrastructure can also be done on PPP levels. But at that level too, you'll be requiring this base data that now is able to now assure your volume that probably can begin to unlock your values. For your friend who you say is educated, and she's made your head for maybe 20 to 25,000, and she's made 5 other people's hair in a day, in a month or so, she'll be any more than a professor. She'll be any more than a director. So instead of now, she should be thanking her God that she didn't have a job and that she's able to now hone up her skills.
No, I completely disagree.
And if she goes abroad to do that, I can assure you.
Yeah, if she goes abroad to do that, you can assure me that she will earn more. She would earn more. Anyway, I'm sure
she's going to be earning as much as the directors, who are paying your own salary.
We are saying the same thing. Now we are saying the same thing, Dr. Okengo. Anyway, it's an ongoing conversation because I think there's a fundamental problem here and the government would have to address this. We just have to address it. Thank you very much for your time, Dr. Okengo.
Pleasure. It's always a pleasure to speak with you. Thank you very much.
We'll take a break now. When we come back, we'll look at the domestic commodities market space. To stay with us. And on commodities market update, I have Desola Sumoni, one of the research analysts with Financial Derivatives Company, join us now. Good morning, Desola. Thank you for joining us on the program.
Good morning, Chimeze. Thank you for having me on the show.
Well, I'm sure you have seen the fallout of the NSAS protests. What is the effect of these NSAS protests and, of course, the ensuing arson and looting on the domestic commodities market?
Chimeze, we watched in horror last week how what started as a peaceful protest against police brutality descended into a state of chaos and utter breakdown of law and order. After, according to eyewitnesses, members of the Nigerian army opened fire. And the result of that, like you said, was arson, a lot of looting. We saw a halt in economic activity across major states of the Federation, as well as a disruption in local supply chains. Overall, the effect of that was higher food prices. And we are already seeing that, for instance, we are seeing the price of a kilo of chicken jumped 38% from 1,300 to 1,500. We have seen a 50 kg bag of rice, the price jumped by around 11% from 28,000 to 30,000 naira. We have seen the bag of beans also jump around 17%. The price of a 50 kg bag of beans jumped around 7% from 18,000 to 20,000 naira. We have seen Gary also jump around 7%. From 13,500 to 14,500. So we are seeing domestic commodities prices jump, and this is as a result of what we saw last week, the protests, the halt in economic activity, and the disruption to local supply chains.
Now, FDC is projecting that headline inflation will jump to 14.4% in October, up from 13.7% in September. Is this forecast still valid in view of the shortages induced by looting in major cities around Nigeria?
Like you said, Chimeze, we forecast 14%, but we forecast inflation to inch up to 14% in October. But in our forecast, we did not take cognizance of, the protests, the looting, and the disruption in local supply chains, and the halt in economic activity. So we may have to revise our forecast upward because anecdotal evidence already suggests that food prices are higher, and we already know that food prices or food inflation is a significant component or is a sizable component of Nigeria's headline inflation basket. So as we've seen food inflation higher, we expect it to trickle down into headline inflation as well. Already, food inflation is already high at 16.66% in September. So I think that we may have to revise our forecast higher. And I think that what we are seeing in food prices will translate into headline inflation for October.
Now, let's look at other economic issues out there. Accelerating COVID-19 cases in Europe has led to stricter restrictions and more lockdowns across key economies in Europe. What is the impact of this development on the Nigerian economy and the domestic commodities market?
like you said again, Chimeze, we are seeing key economies in Europe seeing record rises in coronavirus cases, and as a result, they are imposing stricter restrictions and just short of lockdowns. We are seeing, for instance, in Spain over the weekend, Spain just announced a 6-month state of emergency. We saw Italy also over the weekend announce one of the strictest restrictions they've had since after the lockdowns were lifted earlier in the summer. So we are seeing all of this, and these factors are going to dampen economic activity in these countries. So back to Nigeria, how does this affect Nigeria? Well, it affects Nigeria through two main channels. One is trade. Already, the World Trade Organization has forecast that merchandise trade for 2020 will be down 9.2% because of COVID-19. But if you look at, like I said, Spain has already announced a 6-month state of emergency over the weekend. And looking at Nigeria's Q2 trade figures, Spain was one of Nigeria's biggest export partners. I mean, we export, apart from oil, we exported leather, skins, and cocoa to Spain. So now that Spain is undergoing a lockdown and seeing rise in coronavirus cases, we expect that economic activity in Spain will slow down, and that would affect trade as well. So we expect a slowdown in trade between Nigeria and Spain, and a slowdown in exports revenues. The second channel is through remittances. Now, we have a lot of Nigerian workers working, Nigerians working in Spain. And the World Bank has already forecast that remittances for 2020 will decline around 20%. For context, in 2019, remittances to Nigeria was around $25 billion. So if these Nigerian workers in Spain or in other key countries in Europe, if they lose their jobs or they record a decline in the salaries, then we expect that remittances, inward remittances to Nigeria would also decline.
Now, let's look at the corporate earnings out there. Of course, it's earnings season, and Lafarge Africa published its unaudited 9 months results at close of business. That was on Friday. The results showed a revenue growth of about 31.4% year on year. But reading that report, what does it tell you about the cement industry in Nigeria?
Well, for one, it shows that we've seen a recovery in cement consumption in Nigeria compared to Q2, where the COVID-19 related lockdowns caused a sharp contraction in cement consumption. We've seen that now there's some form of recovery. Like you said, we saw for Lafarge, we saw revenue expand 31% year on year to 179 billion naira. We also driven by sharp increases in volume of sales, and this was driven by robust cement consumption by the private sector, which was quite interesting because during the rainy season, we don't really expect much activity in the construction sector, but we've seen a sharp recovery in that sector driven by private sector demand. Also, we saw a sharp decline in finance charges by around 54%. And we saw earnings in profit after tax, I beg your pardon, increased by around 2.8% to 4.9 billion naira.
So what is your outlook for the price as we enter the dry season?
So typically, during the rainy season, like I said earlier, we see a contraction in demand for cement, obviously because of the rain. Construction activity slows down. But during the dry season, because of a lot of construction goes on during the dry season, we see huge demand, which push prices higher. Now, as Nigeria enters the dry season starting in November up until March next year, we expect that the demand for cement would increase, driven by private sector demand, obviously, would increase, and that will push prices higher. But it's also important to note that the cement market in Nigeria is dominated by a few large players, which in economics we call as an oligopoly. Essentially, these players are Dangote Cement, Lafarge, and BUA Group. And what happens in an oligopoly is that the price setter, in this case Dangote Cement, could influence the prices by reducing their output. So if Dangote Cement wants the price to go higher, they can just reduce their supply and prices would increase. And currently, the prices of cement are around 2,650 naira for a 50 kg bag.
Okay, let's look at the global oil market. The price of Brent and the global oil market was down 3.2%. That was on Monday to about $40, driven by the resurgence of COVID-19 cases in key economies and, of course, faster than expected revival in Libya's oil production. Talk us through these developments and the implications for Nigeria's 2021 budget.
Thank you. So this morning we saw a weaker US dollar and positive regional economic data for Europe claw back some of the losses we saw yesterday. However, significant downside risks still exist and they persist. Like you rightly said, on the demand side, we are seeing rising coronavirus cases in these key economies in Europe. I'm talking about Spain, France, Italy, and Britain. And the slowdown in economic activity, we're also seeing restrictions just short of lockdown. So these factors, again, are going to dampen oil demand growth. So we're not expecting oil demand growth to move higher anytime soon. On the supply side, we are seeing faster than expected increase in Libya's production. Just over a month ago, Libya's production was around 100,000 barrels per day because of an export embargo. So as the export embargo was lifted up, we saw their production increase sharply, and it's reached around 690,000 barrels last week, and it's projected to reach 1 million barrels per day by the end of November. In addition to that, we're also seeing diminishing hopes that a U.S. Stimulus package would be agreed upon before the elections, as well as lower oil demand in the U.S. due to rising coronavirus cases and the fact that winter is drawing near, so there's little driving going on. So overall, these factors, point to the fact that oil prices are going to remain in the $40 per barrel region for the near to the medium term. For a Nigerian budget, the benchmark is $40 per barrel, and with prices around that range, it points to the fact that we will not have a lot of savings in terms of excess crude account, and also we might see an underperformance in oil revenue, which would expand the budget deficit and would increase the need for borrowing both domestically and in the international market.
Okay, now the federal government, of course, is proposing to add the cost of managing the national strategic stocks of petroleum products to the retail price of PMS. Should this bill be passed in the National Assembly, what is the implication of this proposal?
I think the implication is quite clear. We'll see higher prices, all other things equal. We'll see higher prices for petrol, for kerosene, and for diesel. And this also has implications for transport and logistic costs, which is likely to translate into food prices and into headline inflation. So overall, if this bill is passed, I think that we might see higher inflation, higher food, higher transport costs, higher logistic costs, which will translate into higher inflation.
Okay, talk us through the key developments in the global grains market and your outlook for prices.
So in the grains market, we're looking at wheat and corn, and these two commodities usually move together. So whenever we see an increase in the price of wheat, we also see an increase in the price of corn. Currently, the price of wheat has increased by around 0.28%, and this was driven by huge import demand from Egypt, which is the largest importer of wheat globally. In addition to that, we are seeing weather concerns in Russia, which is one of the largest producers, which has affected their supply. So these factors put together are what is pushing our wheat prices higher. And we expect these factors to persist in the near term. For corn, we are seeing higher demand for U.S. corn coming from China, and this is what is pushing the price of corn higher by around 0.36%. And we expect that this would also persist in the near term.
Okay, let's look at cocoa, which is, of course, Nigeria's major agri-export commodity. The price of this commodity is up 0.32% on lower supply from key producing countries. What are the other drivers of cocoa price at this time, and what is your outlook?
So for cocoa, at the beginning of the 2020-2021 main crop season for cocoa, which started in September, the governments of Ghana and Ivory Coast increased the farm gate price by around 28% and 21% respectively. And the idea was to, tackle poverty among cocoa farmers, as well as to increase, the production of cocoa. In addition to that, they also invested in cocoa seeds to replace some of the old cocoa trees. So what happened now is that the buyers were seeing a price dispute, a dispute between the sellers and international buyers based on the pricing, because, like I said, prices just increased, farm gate prices increased last month, but the buyers are complaining that they want to buy cocoa at a discount because of the slowing demand for cocoa and chocolate in major economies across the world. So that disputes has seen lower output or lower exports from these key producing countries, which is Ghana and Ivory Coast, which together account for 60%. And that is why we are seeing prices higher. And we expect that if this dispute is not resolved quickly, we expect that these higher prices will persist in the near term.
All right. Thank you very much, Desola, for your time. Desola Sumoni is one of the research analysts with Financial Derivatives Company. Okay, let's look into the equities market, looking at the activities of Monday, and Eddie Diong Ewa is on board. Hello, Eddie.
Good morning, Timmy. Well, investors went bargain buying in the market yesterday, specifically in shares of Dangote Cement and banking stocks, and that lifted the market by 0.28% to 28,777.96 points. Now, that drove the month-to-date and the year-to-date gains to about 7.3% and 7.4% each. The activity chart was positive yesterday. Volume was up by over 40% at 340.80 million units, worth 5.56 billion naira, all traded in 4,235 deals. Now, we saw gains from most of the sectors. The banking index was up 1.01% due to gains in Zenith Bank, GT Bank, Eco Bank, UBA, and the likes. Industrial goods was also up 0.38%, largely due to gains from Dangote Cement and Lafarge Africa, while insurance declined 0.99%. But let's talk to Phil Anegbe, a research analyst at Cardinal Stone Securities, for more. Good morning, Mr. Anegbe. Thank you for joining us on the program.
Yeah, good morning.
Well, let's talk about some earnings now. Stanbic IBTC is the first lender to release its earnings, and it showed impressive, profit after tax, profit before tax, and revenue. What stood out for you from those earnings, and how do you think that will shape trading for the stock today? I mean, considering the fact that we've seen a lot of interest in the stock lately, how do you think all of that will play out?
Well, over the 9-month period, I think what stood out was the impact of trading gains. So we saw a surge in trading gains actually support the 9% growth in earnings. So that could bode well for the stock in terms of how people react. However, those who are more critical could look at the Q3 numbers where trading gains fell significantly. I think on a quarter-on-quarter basis, trading gains fell significantly. And that more or less impacted non-interest income that came in lower. And that's why you see the Q3 numbers slightly lower on a quarter-on-quarter basis. But other than that, we feel that relative valuation metrics suggest that the stock is significantly undervalued, significantly mispriced, and bargain hunters will still give it a shout, especially in anticipation of the significant mispricing in the name.
So still talking about earnings now, Lafarge also released its earnings, and yesterday we saw investors, pay attention to that stock. What stood out for you in the earnings?
Well, for Lafarge, you want to say it's the performance that was largely volume-driven, and we hinted at the possibility of this happening in our last communication on the company. We started seeing traction since April after the slowdown. We started seeing traction in the company's volumes after the slowdown in April. So those may have actually impacted performance. Finance expense was also lower as expected, given the whole restructuring they've done. However, we did see margins contraction for the company because of increased costs. And that did not come as a surprise given the devaluation and its expected impact on material costs, on the cost of energy like gas, because gas is priced in the naira, but it's invoiced in naira, but then it's priced in the dollar. So we expected that bit. But WAPCO still looks well on course to meet our full-year projection. which is significantly fine, which is materially fine. Q3 is always a weak quarter, so it didn't come as a surprise to us. And then WAPCO is also significantly mispriced by the market. So we still see opportunities for bargaining on price, and we started seeing that already, and we see scope for that to continue in the WAPCO name over the next 12 months.
All right, Mr. Anigwe, thank you for your input on the program. Phil Anigwe is a research analyst at Cardinal Stone Securities. We'll have to pause here on the market review. Over to you, Jimmy.
Well, let's just wait and see how things play out in the market when the market closes today. We do a quick break, and when we come back, of course, we do a quick crossover to London, and back to you, Eddie. And for updates from the streets of London, we have Juliana Olainka. Good morning, Juliana. HSBC says it will accelerate its restructuring plan, slashing costs further than previously suggested. Is the bank likely to cut more jobs?
Well, absolutely. They will be cutting more jobs. In fact, I think that the HSBC restructuring was a plan that was put in place way before COVID took hold and grip of the entire world. So that is going to be taking place. I believe they said that 35,000 jobs will be going, as well as restructuring the entire business plan. Before COVID, they planned on doing that by 2022. But it's certainly going to speed up after their third quarter results that they posted this morning. And as we know with economic data, it's a tale of two stories, really. HSBC shares this morning were up 5%, even though they posted a 35% drop in their third quarterly earnings for profits, as well as an 11% drop in revenue. But it's much better than what some economists had feared. In fact, I was just reading one economist, they actually quoted Mark Twain in saying that the talks of my death have been greatly exaggerated. And I think that's kind of the feeling and the sentiment around HSBC. They're obviously Europe's biggest bank. They have struggled over the past couple of months. In fact, in September, their shares dropped as lower than they had been for almost 15 years. And that's because they were caught up in a scandal, which seems as if they kind of overlooked the fact that millions of dollars had been shuffled through their bank accounts in fraudulent means. But they have put aside between $3 and $8 billion for impairment credit, or bad loans, as it's called. And at the moment, we all know that here in the UK, interest rates are at a historic low of 0.1%. So it has become a little bit difficult for banks' profitability. But as I said, they're one of the main risers on the FTSE 100 this morning. So even though the earnings are down, it seems as if the interest from the investors has picked up.
Right. And of course, reports from the Center for Progressive Policy says business leaders will support tougher employment laws and higher minimum wage to protect workers from exploitation and poverty during the second wave of COVID-19. How much do we know about this report?
Well, it's an interesting report, pretty timely, because, of course, at the end of this week, we know that the government's furlough scheme, a scheme that was subsidising people's wages, will be coming to an end. I know there are schemes that will be taking over, but the furlough scheme is one of a kind, and a lot of people are going to miss it. And for our viewers in the UK, they would know that the government is currently caught up in a major row with an international footballer, Marcus Rashford, to try and get the British government to tackle child poverty. And so this CPP, British think tank that looks at productivity and the prosperity of the workers, is urging the government to do more. And their report concludes that the business community here in the UK are also up to kind of a rehaul of the labour market and labour market laws, which does mean a lot of people here in the UK are feeling pretty job insecure at the moment. Even for those that aren't on the furlough scheme, they do feel as if, some of their employers are playing a little bit of Russian roulette with their job. Am I in a job? Am I not in a job? How am I going to be getting paid? And this is becoming a serious situation. So they have written this report, and they are urging the government to do more, not just for employers, also for self-employed. They also want the minimum wage to be boosted for people who are over the age of 25. They don't think it's sufficient enough as it stands, which I believe it's between about £8.50 to £10.50 an hour. They also want a ban on on 0-hour contracts. And again, this is all coming at a time where at the moment pre-pandemic unemployment stood at about 4% in this country. By the end of the year, it's likely to rise by 8%. I think even the Bank of England have got it down by about 7.9%. So we are expecting a bloodbath of job losses, but it's not just the job losses that the CPP are focusing on. They're focusing on the well-being of people who are in employment in the UK, and they want the government to do more to try and tackle these scrupulous employers who are taking advantage of staff who are working exceptionally hard during COVID.
And in another development, Uber is being sued by British drivers over automated robo-firing. Bring us up to speed with this story.
Well, it's a techie story, but I'll do my best. It's one of a kind, and really what's happening is that a lot of British Uber drivers have found recently that they're being kicked off the app for no reason whatsoever. Well, according to them, it's no reason whatsoever. But according to an Uber spokesperson, they didn't adhere to some of the Uber driving regulations when it comes to the amount of stars that passengers are rewarding them, or how fast you arrive when somebody has held your car. So there's a lot of detail in this, but it seems the overarching theme here is about the algorithm, and drivers and the lawyers that are taking Uber to court on behalf of the drivers do feel that Uber are relying too much on data and algorithms when it comes to putting regulation on their drivers. Uber have responded to these claims, and they did say yes, they do rely on the algorithm, but before they sack their staff, they are using human beings to go and have a look through the data. But it's a very complicated story. It is the first of its kind of a trial. We do know that apparently there are lots of Uber drivers across the world that are showing their frustration on Twitter, saying that this is something that is happening to them. And we know that a couple of years ago in Europe, part of the EU bloc, there was this data protection issue. Anybody who goes onto a website now has to accept the fact that a company will be looking at their data. And I think the accusation from the Uber drivers is that they're not using this data correctly. And of course, it's leaving lots of drivers out of job with no income. So it's a very serious story, and it will be taken to Netherlands court where Uber is based.
Thank you, Juliana. We expect more updates from you later in the day. And back here on the debt and currency market, Eddie.
Thank you, Jimmy. Just before we go to the debt and currencies market, the unlisted securities market jumped yesterday, and we know we haven't seen much activity on that segment. The NSI was up 2.16% at 736.75 points, while the market cap was at 541.19 billion naira. We saw just about 11,313 units worth 1.06 million naira traded in 3 deals. The fixed income market, the bond market, was bullish yesterday as average yields declined by about 10 basis points. We saw 27 deals worth 19.28 billion naira. We saw some changes in yield on the 26th April 2049, the 27th of March 2035, and the 18th of March 2026 maturities. On the other hand, the Nigerian Treasury bills market was negative, I beg your pardon, as yields decreased by about 20 basis points. Now, we saw sell pressure on the 29th of July 2021 maturity. We had 9 deals worth 7.61 billion naira. The OMO market was a bit quiet yesterday, but it was also bullish, or rather bearish, as yields increased on that segment of the market. But away from the fixed income market to the currencies markets, let's talk to Ajibola Aero Phillips, the head FX trading at FBN Quest Merchant Bank. Good morning, Ajibola. Thank you for joining us on the program.
Good morning. Thank you for having me.
Yeah, so I'd just like to ask, with the social unrest in the country, what impact has that had on the foreign exchange market?
So we're saying that has caused a bit of a drop in turnover in the market, and that's understandable considering people doing the curfew, people when they're at work, doing people at work, and especially for the corporates. And the market as a whole generally, so that's basically caused the drop in total turnover. On the larger scale, I mean, all of the issues, the they're in the market separately. Market has remained calm. We've seen that, market is beginning to pick up in terms of activities, even though we're still very, very far from where we hoped to be.
Okay, so the Naira remained stable at 386 Naira per dollar at the I&E window yesterday. Any idea what is keeping the Naira stable?
So there's been a bit of flows from the local market, especially the local non-bank corporates. And then there's some intervention as well that comes from the central bank. I think that happens about 3 times in a week, specifically gets towards the foreign portfolio investors to try and help them fill some of the demand of their underlying obligations. So that has kept the market at the correct level where we're seeing it right now.
All right, Ajibola, thank you for your input on the program. Do enjoy the rest of your day. Ajibola Era Phillips is the head FX trading at FBN Quest Merchant Bank. We'll have to leave it there on the market review for today and keep our fingers crossed for a positive trading day. Over to you, Jimmy.
Absolutely. We'll continue to keep our fingers crossed. And on that note, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimize Obi Iwagu.